All right. Welcome everyone to another J&M podcast. Let's get started with some news. I mean, today was pretty hectic here. I don't know if everyone was properly hedged for this sell-off this
And what happened to cause that sell-off there? Our fearless leader ended up getting the coronavirus.
morning. Yes. I mean that, and we're also at this very important, I would say timely even, need to get any type of stimulus passed here, where really it's coming down to the end of it, and we need to see some kind of movement on that. And so I think all this news is kind of getting to a bit of a culmination of a couple of weeks of stagnation in the market, a little bit of consolidation, and we need an excuse to move and move pretty quickly.
Yeah, the thing that kind of I guess wrecked my expectations for the week was after the election, right? Or the debates, that didn't really change anyone's mind on who they were voting for. So we saw like that initial drop in futures, and then the market started to pump up. And I was like, okay, we have we have a clear upward trend now. We made it through one hurdle that's going to reduce volatility. And I was feeling confident. And then as soon as we get to that point, the market just throws some uncertainty back in with the coronavirus thing. So now I feel like we're right back to where we were like 2 weeks ago. Like actually, we've been there for almost a month now, right? We're range bound between 330 and 340. Like we can't break above it, and we're not really falling too far below it.
Right, and that's one of those things where the longer we stay in this range, the more chop we're going to see, and we're also going to see a little bit more volatility here, especially as we start to move to the downside of this range as well.
Was the sell-off as bad as you thought it was going to be when you checked futures after the announcement last night?
I would say it could have been worse, honestly, and I was expecting a little bit more. I mean, on a points wise, we only ended up closing down, 20 something points like that, where I was expecting us to kind of end up experiencing a little bit more of that Friday style sell-off. But we actually retagged the 335 area where we tried to keep that a couple of times today. So I was a bit surprised by that rebound.
Yeah, same, dude. Like when I looked at futures, we were down 41 points, and I think it was like 1.5% or so. I was like, oh, we're going to 3%. I'm like, this is gonna be bad. But even VIX, UVXY, like there was a pump, but it wasn't anything really significant. And then even the SPY drop just got bought up this morning. We hit that low of 331, and then like you said, we hit 335 and just kind of stayed there, which I think is good for the market overall.
Absolutely, I agree. And I would have liked to have seen us hold that a little stronger, maybe close above it, and just kind of chopping around slightly below it. I am a little concerned for what might happen Monday. We might get another, gap up pre-market and then another pullback that's going to continue into Monday.
I don't know, man. I think it's going to take some like pretty drastic news over the weekend to cause us to keep going down. I think the dip gets bought up and we go positive. Unless they announce that like Trump has gone full Boris Johnson and he's on a respirator, then then we're going to be screwed. But
Oh, absolutely. And that's one of the things that we're seeing where, any type of world leader getting COVID, that news tends to evolve pretty quickly. And we'll probably see a couple more headlines over this weekend. I think Trump is actually holding, he said, a rally this evening virtually. It seems like he has a very mild case, if anything, and I don't think that news will have any, additional downside to it. It's pretty much priced in at this point that he's going to recover and recover in the market as well. I am interested in seeing if we get any type of headlines over this of the stimulus over this weekend and how that might bear on futures for Monday.
Sunday. I kind of think that the stimulus might be dead in the water. I don't think that either party really wants to do anything until the next candidate is in office, whether that be Trump or if that's Biden. So I don't think we're going to get one before the election. It would benefit Trump more to get what he wants out of a stimulus bill heading into the election, but I don't think the House or the Democrats are going to allow it.
And it's one of those things where, they've said multiple times, Pelosi has said how far away they are on both ends of the stimulus package from
Yeah.
coming to some kind of mutual agreement. And I think we're seeing that play out now, maybe getting priced in a little more in the market, especially with today's movement.
It's
And
to be honest, man, it's kind of bullshit because the American people need the stimulus, right? There's still industries that aren't back to where they need to be. Bars, restaurants still have limitations. So people need that money just for help. But it's tied up in like political gridlock. Like they're not doing anything about it to make one candidate, better or worse. So they want to make Trump look bad by not by saying he's not able to, help Americans. And then I bet you if Biden comes into play and he's the president, the stimulus gets passed significantly quicker. Like I think they'd be more willing to compromise if that was the case.
absolutely. And I think that's one of those things as well where we're going to see that, I think the difficulty in passing the first stimulus package is nothing in comparison to this new package, right? Where we have additional clauses that are needed. We have, maybe a larger financial burden on actually increasing the numbers and making agreeable numbers on both sides of the parties. So that's the kind of thing where it's like, because we weren't able to come to some kind of longer term agreement in the initial package or the initial care package that we received, anything now is going to be, I think, substantially less than what we should have been having this entire time, right? Where we're going to have consolidations and compromises on both ends that'll probably end up leading to a package that's less than ideal.
What do you think the chances are if they do end up passing one before the election that it has almost no effect on the market?
I don't know. I think the passing of the package deal is going to have a very profound effect on certain sectors of the industry, right? And we're going to see a very large, probably, pop off in other sectors that might not have been leading the rally so far, right?
Yeah.
That could potentially be, the ignition to push us higher towards the 340s, 360s, things of that nature. But until then, right, I think we're looking for any excuse to sell off at bearish news, sell off at this news, and then, that is being bought every time, like you said.
Well, hey, we saw that with AAL this week or last week when they got that bailout package or whatever it was. Everybody was expecting AAL to go through the roof, but it just got sold off. It had a nice pump, so you were able to play it and take profits. I mean, don't get me wrong, but it didn't hit that 15 level that we were all kind of targeting because it needed to break and hold above, I think, 1280 or 1350. I'm sorry, and then it would have hit 15, and it just couldn't get there.
Yeah,
so
and that's for now
it would have to be hospitality and travel oriented, I think.
Yeah, and now we're seeing, if I'm looking at AL, we had a close at around 13, and we managed not to break a strong resistance at around 13.5.
Yeah,
we're stuck underneath that now, and I wouldn't see any type of movement to break above that unless it was, in correlation to some kind of progress on the stimulus package. That's, I think, a key item that a lot of these stocks kind of waiting on or being a little more, choppy until something happens on that end.
Yeah, you don't need just like one piece of good news that, hey, they're getting a bailout. You need like a truckload of good news. You need news that will make sure the company's sustainable for the next 5 years. And I'm not saying AAL isn't. I mean, they're going to be around for a while, but it'll help investors if they see that, oh, hey, we got the loan and then we're going to get this government funding. We're going to get all the support. And then the government's taking the right actions to make sure Corona is not going to be a big deal next year. I think that's where you see like the big jump on AAL. It is kind of a bummer though that like even with the holidays coming up, I don't know if travel would go up, right? Because you have Thanksgiving, you have Christmas coming up, were the two most traveled holidays per year. So do we see any kind of like boost there for travel maybe?
If anything short term, I don't think we're going to see any type of, there is and has been noted a steady increase in travel, right?
Yeah.
And so that's something that's going to occur over time. I think anything that happens for the holidays specifically is going to have any outstanding effect. We may see some kind of, rise in the stock where as we approach the holiday season, there's an expectation for,
Yeah.
increased travel. But I don't think it's going to be enough to, kind of maintain higher levels.
I could definitely see that happening.
Yeah. And I mean, even just looking at, where we closed, right now for this weekend, VXX is at around 25.78. So we didn't really lose much there. I had 26 calls that I had been holding, still holding a couple. And so we kind of pulled back a little bit there, but that stayed high, right? If we're looking at VIX, right? Where did we close on that?
I mean, looking at VIX, our high was 26.38 today, and yesterday's close was 25. So even with that news that Trump got the virus and futures were tanking and everything, it wasn't even that bad. It was almost negligible. Like that's a decent increase, but I'm not really too worried about VIX until we start getting that 29.30 level. I mean, VIX is designed to decay over time, but I think once you start seeing spikes that go to that range, then you're like, oh shit, something might be happening.
Absolutely. And that's one of the things, if I'm just looking at the chart right now where we're still in a, strong downtrend, in general, we do have a bit of a wedge here. It's kind of interesting how that's going to play out. But for now, like you said, as long as we're kind of sticking below 29.28, I think that's okay. I do think there is a little room for it to move a little higher, retest this downtrend that I'm seeing right now.
Yeah.
Aside from that spike. But really, I think unless we can reclaim 335 in SPY, moving into Monday, we might see some more range bound trading. We might see a little more chop at this level as we try to see the market kind of move higher a little slowly now, right? And we definitely lost a little bit of momentum. That was probably going to move us up into the 340s.
Yeah. Isn't it kind of strange that we're not seeing like precious metals pump at all? It's like no one's hedging with gold and silver anymore. Because you would think that with all these like anticipated drops and all this uncertainty and who knows what might happen, that gold and silver would be going through the roof.
Right, and that's one of those things that we're seeing those sectors no longer function, almost inverse to the market. They're kind of, stuck in this range bound again. Commodities as well just aren't performing.
No, and like TLT is the same thing. Treasury bonds, like it's supposed to be an inverse relationship with the S&P, but it's doing the same thing as precious metals are. So it's really hard to decipher what these other market indicators would mean for the S&P and the NASDAQ and things like that.
Right, and that's one of those things that it's, as we do expect this movement higher, as we are, looking forward to SPY kind of rebounding from here, people buying the dip and etc. What we're really seeing, the rest of the market isn't moving in coordination. It isn't moving in step with the S&P or as quickly as we want those other sectors of the market in order to really feel confident. And I think that's just because of the level of uncertainty that we're at right now.
Well, let me ask you a question. Did you buy the dip today?
Oh yeah, absolutely. I have a couple of calls for Monday, but I am still. And especially with the trends that we've been seeing, you kind of have to at this point, because we are seeing these rebounds occur. I like where QQQ ended up. We did have some call buying throughout the day, and so if we're just looking at like straight, performance over these past few weeks, we're seeing these dips being bought back up. If we're looking at the one that everyone was talking about today, which is Tesla, right? We're down 6-7% on that. I wouldn't be surprised to see that rebound higher and go to retest those 440 levels.
Oh no, I mean absolutely. Like so, I touched on this during the Power Hour chat. If Tesla drops below 411, I would be concerned that you're going to see that 393 level again. But I think if it can hold above 411, I think the next target will be 429. And then after 429, you're hitting that 440, 450 level.
Absolutely. And that's the thing is that we saw this last time.
Yeah.
In the battery day. where we had, a bit of a sell-off, pullback, and we start to ramp again. I think the last time Tesla had on the chart the like day where it was red more than 5%, it rebounded massively the next day.
Yeah. That's one of the things too. Like a lot of people in the Power Hour chat were talking about rolling some Tesla calls over the weekend and then buying calls now on the dip leading up into earnings. And I think both of those strategies are super viable.
Right. And it's one of those things that we're going to see, premium start to increase on all the Tesla calls as we start to roll out towards the 30th.
Yeah.
And so, if you had a delivery play with a far out enough strike, right? So one of the options a lot of people were looking at is maybe getting a 500 call for the 30th.
Yeah.
Today's pullback, I probably would have held some of those longer dated calls just as the ER play, right? Just as we're holding ER and capturing that on those expiration dates.
I think it's going to come down to the last couple of days in October, because that's when you have your Teslas, your Netflix, Apple, all the big tech companies dropping their earnings. I think that probably is going to be where the market decides if, hey, are we going to all-time highs again? Is, our financials in a good place, or are we going to go back down to 315?
Absolutely.
Like, I think that's going to overtake the whole election debate and Donald Trump thing. I think it's all about the money, and tech has been leading it. So let's see what they got.
Right. And so, we're looking 2 weeks from now, we're going to be seeing a lot more movement as we try to break out of these ranges. And that's whether it's to the upside or the downside.
Yeah.
I'm excited to see where we go from here. Mixed sentiment moving into Monday. But
I'm hoping for a fat ramp into next week. I mean, I'm hoping that we go super green. I think Tesla gains back the 30 points that it lost today. Like, I need more bullish green in my life.
Absolutely. Now moving on, I think a lot of people did vote. They wanted to talk a little bit more about Tesla. Should we dive into that while we're here?
Yeah, we can. Do you want to talk like long-term strategies, or do you want to talk about just the short term? Because I think we can tie this into doing like a chart analysis as well.
Absolutely, yeah. And so we can kind of cover both of those topics at the same time. Right now, Tesla's exiting this long-term pennant, and we have some important news that just came out specifically into the delivery numbers today.
Yeah.
And now we have the next earnings is going to be coming up that last week of October as well. So what we're looking at really is from now until then, where exactly can Tesla hold, and how far can we expect it to travel in this range?
Yeah. So from my perspective,
Right.
I'll just touch on it a little bit, but I think that we stay range bound between 411 and 448. I don't think we see the 450s anytime soon unless there's just complete clarity in the market and things are going green. But I think that week or 2 weeks out before you get to earnings, if you are looking to jump into a position, I think that would be the time, because you have multiple ways of being profitable there. So you could buy an out of the money contract, ride the IV up into earnings and then sell, or you could buy a few weeks after earnings and buy something slightly closer to the money if you have a large amount of capital and play it that way. Because we all know that earnings is going to be good. Their EPS is going to be, they've made strides in new gigafactories, new production, that whole cost reduction thing they had for Battery Day with the minerals. I think that's going to be a huge key factor for long-term value investors. So I think just holding that range is going to be key, and then I think it's going to explode afterwards.
Absolutely.
Oh no, I think you cut out, or did I cut out?
And if we're looking at it from a bit of a fundamental perspective, I do think that this quarter is going to be pretty substantial for reported. I think the estimate right now for numbers out of China is going to be less than what we're actually seeing. They recently lowered the price on Model 3s. We're seeing reports coming in specifically that the China numbers are overwhelming, that they're back into high production. All of these things are going to be very favorable to those numbers they report for this quarter. I think as a sector individually, the performance of Tesla in China is going to be pretty important to, any type of longer term outcome. We're trying to see, the type of performance we had here in the States duplicated overseas.
I mean, so if you look at the overall EV market with like NIO, and then now you have Hyliion Motors as well, Nikola's out of the picture. I think that entire market is set to explode based on the technology that Tesla's going to bring to the table with how they design their batteries. So if they can provide in their earnings statement that, hey, we're able to lower our operating expenses and we're able to reduce the price of these cars and sell a higher volume, you're going to see a jump all around, I think. Because usually there's a lot of sympathy plays if you're playing Tesla ER, right? You can play Nikola. Usually they get a bounce and they run together. So there's a lot of ways to make Tesla long-term profitable. What do you think about a leap strategy versus buying long-term shares on Tesla?
It really depends what you're trying to play on, what time frame.
Yeah.
And also, I think, especially with how Tesla's been performing recently, we're going to see that some of these leaps are going to be very favorable, depending on your capital requirements, because Tesla IV specifically is going to expand tremendously over time. That's just one of the things that happens as we see this type of volatility, as we see Tesla. I've seen a lot of news recently where a lot of people are saying Tesla's not going to retouch that 500, mark for a while. And I don't think that's true at all. Right?
I don't think so either.
Take on these crazy runs, and if we want to take it back in time, let's take a look at when Tesla first touched over the $1,000 mark, and this was prior to any type of rumors on split. This was prior to even going up to twos. Everyone, a majority, were saying that this was the end of a parabolic run to Tesla.
Yeah.
Specifically when we touched that 1,000, I think initially it was like 969 or 970.
Yeah, it was 968 was the all-time high.
That level was reclaimed very quickly, right?
Yep.
And obviously, Tesla as a stock is very volatile and tends to make these large movements. But I think we're also seeing these, kind of longer term sentiments come to fruition, right? We're trying to see, these estimates of Tesla's, total volume, these possibilities where we can be breaking 500K, a million cars in the very near future as they expand their capacity. And that's starting to, kind of to this stock become a lot more bullish when it moves up, right? It starts to move more quickly. It's already established its foundation here, I think. And so even though we can see a pullback to, maybe the 380 in the worst case scenario, that's going to get bought right back.
Oh yeah, absolutely. I mean, if you have an opportunity to buy Tesla at 370, 380 range and go long, at that point you can even go shares or leaps, and both of those are going to be profitable. You could go fractional shares or invest some out of your 401k or stash account. And I mean, once Tesla makes the next leg up for the parabolic move, I think you're going to have a massive return.
I was just talking the other day about how, a couple of weeks ago, earlier in the month, September, when we had that dip, right, and when we had a very large sell-off, where Tesla ended up touching 330s. I don't think we're going to see that level for a while again.
No, I don't think it's likely either. This is kind of off topic, but it ties into Tesla. One of my buddies a while back, before Tesla had to jump to like the 960 and the 1,000 range, I think on his stash account, he kept investing in like EV technology. And then one day he calls me and he goes, bro, why am I up like $850 on my stash account? And I was like, are you invested in Tesla? And he goes, yeah. And I was like, well, they just had that parabolic run. And there's a lot of policies like in place, like the big ones out of California, right, where they're trying to get rid of all the internal combustion engines by 2035 for new manufacturers. Right. So if you're looking to go long and you're looking to buy those leaps, those types of policies, I think, are going to become more common, right? Where they're going to want certain people to just go full EV, save the environment, climate change, all that stuff. If Tesla can lower that price point, drop that $25,000 car, I mean, that suddenly becomes a luxury vehicle affordable for the everyday person, you know? And people are going to be incentivized to buy EVs. Go ahead.
Is that Tesla's trying to expand, their offerings. Pretty soon they're going to have the Cybertruck. Pretty soon they're going to have an even cheaper EV than the Model 3. Really to maximize on their market takeover here, and allow them to continue expanding into sectors to the point where they're a one-stop shop, and there's no reason not to buy one, right? And I think as we see this, kind of play out on a long-term scale, there's a lot of things in the works right now that are going to lead to, tremendous leaps in Tesla's ability to deliver. Going back to the battery tech, going back to, those gigafactories overseas, going back to just Tesla's numbers and expectations for this year, as we kind of zoom out and see the bigger picture beyond this quarter, really we're in a good position for Tesla.
Oh yeah. So think about it like in 2018 when Tesla was trading at like 220 range or like 175, right? So the big thing that kept like hampering their expectations was, well, Tesla has supply chain issues and they have a lot of back orders because they can't mass produce things yet. And there were all these challenges. And every time Tesla's been able to overcome each one of those, they fixed the supply chain issues. They opened up more gigafactories. They're able to hit their production targets. They reduced their operating expenses by moving to China and then having the deal and the funding to the Chinese government as well. So every time there's any sort of hurdle as far as advancements go, Tesla's been able to just blow right through it. So if you're going long on Tesla and you see the price point of 380, 390, I think you jump in. I think long term it's one of the safer plays, especially if they can deliver on what they're saying, and I have no doubt that they can.
Right, and that's one of those things that where a lot of people might be confused when it comes to entries into any type of leaps. Is if we're looking at a technical pattern, obviously we're understanding any potential risk of downside for Tesla breaking out to the bottom side of this pennant, right? And it's not something that we're expecting or looking forward to, but it is a possibility just according to the chart. Regardless, when we're looking at leaps, maybe you'll get a better entry at the bottom of the chart pennant. But regardless, all of the news that is coming out is still very bullish in nature. This is still good. A lot of people are maybe confusing the sell-off that occurred today with the delivery numbers in, a perspective that, oh, these numbers weren't that great, or maybe, these numbers were what triggered the sell-off. And, while Tesla didn't over-deliver, they didn't beat this. There wasn't, a surprise beat. You under-deliver either, right?
No.
If we look a couple of weeks ago, the consensus was about 120K deliveries. If we reported, almost 140K deliveries, that would have been a major beat. And so for the consensus to rise 20K, right? All right, now maybe matching the consensus at around what we ended up was 139 on deliveries. 139, 300. That's still good. That's still amazing. That's still a gigantic quarter-to-quarter jump. Quarter.
So in Q1 of 2020, I think they reported deliveries at like 93,000, and I think that was like a massive beat. And then now you're beating that by almost 40K. Like you're seeing consistent growth, you're seeing positive news, you're seeing the company go in a very positive direction. So if you're looking at it from a short-term perspective, there's going to be some dips and there's going to be some disappointments. But is that because Tesla's not doing well, or is it because that the expectations are so high that no matter how well they do, it's not going to be well enough for investors until they reach that point to where, oh shit, they came out with breakthrough technology that changed the whole landscape. And I think that's kind of where they're headed.
Absolutely. I mean, let's break down those numbers even a little more. If we're looking at this, this is still, I'm looking, their previous all-time high for delivery numbers is 112,000, right?
Yeah.
So we're beating that record by a lot. If we're looking at production capacity, they're up 82,000 vehicles from last quarter.
Yep.
Almost fully recovered. And, like I said, we're also seeing news of China being in pretty much full swing back again, where there's probably a rush over there too with the new, price decrease on Model 3s. Going into next quarter, I expect this to continue in momentum. We might see a little less in Q1.
Yeah.
But aside from that, any pullback right now is temporary in, the scope of these really amazing numbers.
Yeah, I mean, we make jokes about it all the time, and you see the memes where it's like stonks only go up. But I mean, if the company's financially solid, it's true. Yeah, there's going to be some short-term dips while they work through like supply chain and production issues. But a lot of these high growth companies end up delivering. Like Home Depot was one that we talked about last week, I think, where if you had put $10,000 into Home Depot when it IPO'd, you would have made like $2 million or whatever it was. If the business idea is solid and the company can continue to deliver, you're okay as a long-term value investor. The only time you're going to get burned is if you YOLO into short-term options and then theta kills you or just moves against you. I think if you have time on your side in regards to Tesla, I think you're usually going to end up positive.
Absolutely. And I'm excited to see, how we can play Tesla leading up to earnings now, and also where, our expectations are for Tesla exiting earnings as well. I mean, if we're looking at earnings, right, remember we're looking for Tesla to report that second to last week of this month.
Yeah. They're on the 26th or the 29th?
We'll see if we have a date here.
Just to kind of touch back on the delivery numbers thing,
On
the 28th.
Yeah.
Just to go back to that delivery numbers thing where it was kind of a disappointment. Every article that I've looked at regarding that information was like, Tesla was down 5%, but none of them said that Tesla was down 5% due to their own performance. Every single article was like due to Donald Trump getting the coronavirus. So I don't think there's a disappointment in the delivery numbers. I think those are solid. And like you touched on earlier, the consensus was anywhere from 123,000 to 140,
Right.
So they were where they needed to be. And they saw upward revisions in delivery numbers. So
yeah, no, it's going to be interesting to see if Tesla does take this pullback and how quickly of a rebound we can see leading to earnings, because I definitely think the run up at this point is expected.
Yep.
And we're going to probably see that, I would say in the back half, maybe the back half of next week, kind of seeing where that daily pattern plays out after we have maybe 4 or 5 more candles in on that.
And then I could see some, I could see some consolidation next week, and then maybe the week after that. But I think at the end of that week is where you start seeing a slight pump into earnings. And then there's always the volatility play. If you have the capital, there's always the long-term earnings play. And then, as always, you can just buy shares. They do it fractionally on Robinhood, or you can just get actual ones.
And that's the thing. I'm going back to earnings. What I'm looking at right now is we have a consensus EPS of 17 cents.
They're going to murder that.
Yeah. Oh, absolutely. I mean, and if you think they were going to, what we're going to see is we're going to see these credits, right now continue to stack up and, kind of lead to these profitable quarters, right? As they, get money on those carbon credits. But separately from that, we're seeing the vehicle, production ramp up tremendously, I would be interested to see how that stacks in with the credits as well, and where they can beat that. If we're looking at previous quarter.
Yeah.
Let's see. If I'm looking at this right, previous quarter, the estimate was negative 47, and they reported positive 10 cents.
Yeah. Well, it's not even that. There was it wasn't last quarter, but I think it was a couple quarters ago where they ended up claiming that FSD revenue as part of their EPS. And that's what provided them that huge beat where everyone was flipping out and they're like, oh, Tesla earned a profit. So a lot of their cars already have the inherent built-in value to upsell, right? So you can buy a stock Model 3 or S without the FSD, and then months later go by and you can get a $6,000, $8,000 tech package that gives you the FSD features. Or even if you have those features, like Jovan was saying, you can they have other features you can buy tech-wise. So
you can upgrade the top speed of your car through an app.
Yeah, with a button. Yeah, that's crazy.
And I mean, if we're looking back, if we're going historically to look at previous, quarterly earnings on those estimates versus what was actually reported.
Yeah.
3 out of the last 4 earnings had north of a 100% surprise beat.
Yeah.
That's not something that you're going to see elsewhere. And obviously, the numbers we're talking about are very small when we're talking about 10 cents earnings per share. But separate from that, to see the consensus still be so bearish, still have these consensuses, negative. This is the first, I think, if I'm looking. Well, actually, no. So Q4 December 2019, the consensus was actually 11 cents. And, currently we're seeing estimate of 17.
Yeah.
Year over year, there's definitely been a increase in expectation. But to have a very, drastic change from negative 47 EPS to, positive 17 EPS is, at least showing to me that they're starting to catch on with this trend of where Tesla is going to be. If we can look back, where Tesla might be next year, I wouldn't be surprised to, be seeing numbers like $1 earnings per share, right? Within the next 5 quarters.
Yeah, the big thing there on that EPS beat is their fiscal EBITDA at the end of the year, right? So their earnings minus taxes, operating expenses, overhead, and all that stuff. They already said they're going to drop that $25,000 car, and then they're also talking about increasing battery life, and they're also talking about reducing the operating expense of producing a car. Now that they have like the Gigafactory in Berlin, I think they're trying to build one in Texas. Then you have Shanghai, Fremont, and I can't remember where else.
I think I lost you there for a second.
Oh, yeah, I was just talking about all the Gigafactories that Tesla has, and just overall reducing what it takes to produce a new Tesla vehicle. So one thing that I think they're going to look at on the earnings statement is what the cost was of all these gigafactories and all this ramp up in production, and they're going to look to see if that ROI on those investments is offset by what they're reducing the build, how do I want to say this, how much it costs to build a Tesla. If they can lower the cost, increase the margins, still have a good price point to appeal to consumers, and then they're also producing 150,000 vehicles a year or a quarter, I mean, I think that's all bullish news.
Absolutely. I did lose you out in the beginning there. I caught you in the back half, where you're talking about gigafactories. I'm not sure if anyone else was able to hear or if it was just my end.
I don't know. I lost you earlier today, but I don't know if that was just on my internet or I don't know. Were you lagging earlier?
I don't think so.
Okay, then that might have just been me.
Okay.
No, we broke on Jumbo.
Oh, hey, Chris.
Yeah, we had issues. I think it's Jumbo side. I also could not catch up with Jumbo last time. He broke.
Okay. All right, give me 1 second. I'll just double check that real quick.
Now you are good. Now you are good, Jumbo.
All right, cool. So while he's fixing his router, I guess I'll just keep talking about Tesla. Yeah, I think the big thing is going to be just lowering operating expenses, looking at the return on investment for all the gigafactories. And then I think long term, they're really set up to exceed. They're going to do really well. Like the big thing was, I remember a couple quarters ago with FedEx, they had that Kinko's purchase and then write off for a loss, and that kind of impacted their earnings. So now that Tesla's reaching that next level of financial statements and being more profitable, I think investors are going to start looking at how they're going to maximize their margins on all these vehicles. And I think that's what we should be looking at as well. Like the EPS beat's going to be cool, that's fine. But you're looking at your EBITDA at the end of the year. So what's that earnings minus your operating expenses, taxes, and everything else? So that's the information we should really start focusing on looking long term.
I agree. And I think, we're going to start seeing some movements in Tesla as they start to mature here in the sector. Pretty much, aside from any developments, for example, in like the Gigafactory in China, where I know their primary base is, hustling on those Model 3s.
Yep.
Aside from that, I think their production line and, their models have matured to a point where now we're going to see improvements on, those costs, improvements on battery capacity, improvements on other technologies. Now that they, essentially had their car tech become established, right? Where we've seen across the, 4 models they have now, everything's pretty much set to go, right? All of that tech is done, all of their, production lines, all of their capacity is established. We're seeing these good numbers and we're seeing them with regularity. The next thing is to improve, iteration wise on, other sectors where they can kind of, begin to improve the range of their vehicles, the things of that nature, and I think that's why they're kind of pushing back towards the battery.
I think so. In my opinion, I think Battery Day would have been a much larger hit if there was an actual crowd and they weren't all in their Teslas. Because if you just look back on what they said, where they were like, hey, in airplanes, they used to put the fuel at like the bottom of the plane, and it was all this, and then they started building the fuel into the wings, and it made it was a huge stride in that industry. And then the way that Elon connected that to what Tesla's doing with the batteries, where they're removing all that space and adding more fuel cells, I think that's a huge breakthrough in technology. Because now that Tesla's going to start doing it, all of these other companies are going to start doing it as well. And maybe they can't do them by themselves, so Tesla's notorious for dropping blueprints on their own vehicles, so other companies can innovate, and then they will force Tesla to innovate. Because there's multiple interviews where Elon will say something like, you can download all of our blueprints and everything, and if you can make a better EV than I can, then there's no point for us to be in this industry. So he's all about innovation. And that big leap in battery tech is going to cause other companies to try to one-up them. And then you're going to see that further growth from all of the EVs led by Tesla.
Right. And I think that's one of those things too, is that a lot of people misunderstood maybe the, long-standing effects that these announcements on Battery Day will have.
Yeah.
Just thinking off the top of my head, I know a lot of people focused specifically on Tesla's attempt to harvest lithium from the salt deposits, right? And there was a lot of, guesswork into how they would make that a sustainable, practice, how the plot of land that they bought in, I believe, Nevada was actually going to start churning out lithium, things of that nature. But if we just take it back a second, they're looking on a longer term timescale about how they can cheapen the process to, develop on a full scale production these new batteries. But the new batteries, the improvements in the new batteries, just in themselves, is going to have, a very outstanding effect on their ability to produce cheaper, longer range cars.
Yeah.
As is. And so once we start to see that production ramp up, I think a lot of people were focusing on the wrong part of the picture when it came to something like battery day.
Yeah. I agree with you. I don't know if everyone listening can tell how bullish we are on Tesla. This whole conversation makes me want to YOLO my whole account into just Tesla calls. I mean, we're selling y'all pretty good, I think, in my opinion.
I would
But
agree.
yeah, I think like Tesla is a really good company. It's run by someone who wants to innovate and just change the landscape for EVs, not just turn a profit. And granted, he does say some outlandish shit from time to time, but it always ends up working out well. So
now I think now would probably be a good time to transition into the charting part of today's podcast. We could talk a little bit about where Tesla's chart lies right now, some potential ranges that can be played, and also how I might set up a chart to look at this going into earnings or going beyond that.
yeah.
Cool. So if you give me one moment here, we're gonna set up the screen sharing on my end.
Okay. Sweet.
All right, and what I'm going to do here is I'm actually going to head over and create a new drawing set here. So we can erase some of these lines, and I'm also going ahead and I'm going to delete my pivot study real quick, which is just going to chart some basic pivots. So on my end here, you should be seeing a very basic chart for Tesla with some EMAs on the lines. Aside from that, I don't have any other, pivot lines, any other support lines. The only studies I have on right now are going to be those pivots that I said, where we're looking at the the EMAs, which is the 8, 21, 34, 89,
Yeah.
custom volume script, and we have our TTM here. Aside from that, this is a very basic setup. My chart's going to be customized a little bit, obviously. I've changed a couple of settings on my Thinkorswim. But aside from that, this would probably be a pretty good starting place, a foundation, if you were looking at Tesla right off the bat.
Okay.
So now moving on from here, right? Obviously, we're looking at Tesla on this pennant here, right? And this pennant is formed, off of that high, that 502 on the daily, and off of a previous low here where we kind of tested this EMA. I'm trying to see this candle. The low would have been 273. So if I'm looking at this from here, this is a very obvious pennant formation. And what we would do is we would actually come in here and establish our longer term trend lines on the daily time scale from that recent high and from that recent low.
Yeah.
Right. And so if we're coming in here very easily, probably what I would do, let me just change my tool real quick, is we're going to get a line in here at right around that low. I'll come in and adjust that a little bit. And we're having it right off the bottom of this recent one right here. Previously, I probably would have used this area as the bottom of that long-term uptrend, but we're going to use this most recent low here off of this last daily candle on the 24th. So we have a long-term uptrend there, and I'm going to change the color from red so it's a little easier to see. I like blue. So we have that there. And then off the daily right here at the 502, we're also looking at another trend coming right off the top right here that's kind of holding our movement to the downside. Now, if I'm just looking at these daily candles and I'm trying to figure out a couple of locations of where I might put this downtrend line to form what is our daily pennant, what has been driving Tesla's price action since 502, I'm most likely going to aim it right around here. Well, maybe a little higher, maybe a little lower. And it's going to look something like that. So now I can come in and I can actually adjust these pivot lines. I'm sorry, these pennant lines so that they match up at our exit point. And so very basically, right off the bat there, we're going to have our long-term pennant. And this is going to look very similar to the pennants on, Hovon's and JW's charts. And this is just right off the daily time frame. Now, if I'm looking for any type of support and resistance lines, this is where we're going to be looking for our price reactions at these different time frames, right? So starting on the daily, we're going to be looking for a couple of things. And the first thing that I'm probably going to put in there, if I'm going to use this chart to kind of create predictions going into late October, right? So, we said earnings, hold on, is on the 28th, right? So right around where this blue question mark is, a little bit after that. So the 28th is going to be over here. So obviously I want this chart to serve me for these next 2-3 weeks here, so that I can have a prediction at least of what's possible in our range as we approach there on that 28th. So we're still working with the daily here, and what I'm probably going to do is I'm going to probably put in a couple of pivots based off the current pivot point. So if we're extrapolating here, we get some price levels. And I can go ahead and we have a pivot of resistance over here at 431.15. Oops. Hold on, let me just fix that one real quick. So let that start there. And what that'll do is that'll let me start right now on my chart. I don't have my after hours trading highlighted, which would show me where the weekend is going to be, right? So I'm just having these lines start. So it's something that I can look at going into Monday. So, on the 5th here. On the daily candles, I'm going to have these lines over here for our pivots, where we're looking at going into Monday. Now we can actually add in some more lines based off of what I'm just looking at right over here. And I probably would add a line. We're zooming in, let's actually take a look at what our 4-hourly time frame looks like. So here we go. Now we have our 4-hourly. We have a bunch more candles established here. I can drag this over to Monday. So we have these lines here. And they're just extending to the right for right now. Or is that 407? So I kind of messed these up by dragging them over. But the idea is that when I come into Monday, I'll be able to actually see these on our smaller time frames. So we have that, they're all crossing into Monday. Now we can actually take a look at where some of these extra levels might be. I'm gonna go ahead and manually expand our price range here and zoom in just a little bit more here. So we can see on this 4-hourly time frame, a couple of key zones. So right off the bat, below 400 with some targets here, we're going to have a line that's coming off of this 4-hourly right around here in the 380s. If I'm looking at where this lower wick closes, at around 394. And we're going to have it tested a couple of times over here. Highs 388 on this candle. Probably put it right around here. And as we're looking here, we also are going to have our level right over here at the 450, which also coincides with our pivot. So notice if I had a key level coming in here at right around 450, going all the way back to about August, we're having price reactions at this range as well. Now, I'm going to leave my pivot point right here for Monday, which remember is that second level resistance at what should be 447. But if I'm just looking at my 4-hourly candles here, historically, I can see that going back into August, this is an area of key resistance, prior to the initiation of this pennant here. So I leave this in as well. Now, aside from that, aside from levels of interest right now, just looking here, I would start off with this 4-hourly, and then we're going to make our way to some of the smaller time frames as well.
So looking at the smaller time frames would help you kind of project the weekly, and then if you're looking at the hour, you're kind of looking more towards long term, correct?
Absolutely, right? And so, I have these pivots in on the daily just because I'm expecting them to, have some kind of reaction as we're in this range between our first and second levels right here, right? So that's our zone pretty much. For Monday, this one was at, and I think by moving them over, I messed them up a little bit, but this one was about 431, and our support was at about 407. And so if we're looking at this area where we kind of bounced in, and I'm actually going to zoom in even probably a little bit more towards the more recent end of our pennant here.
Yeah.
As we kind of get to some of these shorter term time frames, these lines here, what we're going to see is that we can kind of trade the smaller zones until these larger zones are broken, right? Until these larger areas have price reactions. So like on this time frame right here, right, we would have a zone right over here. Now it's going to coincide with where our pivot was placed before, that 407, where we're having multiple bounces off of this level.
Yeah.
I would like to see us hold this range here between, maybe 407, 400 going into Monday.
And that would set you up for a massive bounce up to the 426 level.
Exactly, right? And so, that little gray box that I just put in here, because this is going to be the weekend and we're coming into Monday here.
Yeah.
Is kind of going to function as, an area of interest for me to see if there's support in this range enough to bounce us back, right? If we're looking at this long-term pennant, we're essentially retesting the breakout. And a couple of things can happen. We can kind of chop down into this range here, right, where we just kind of move in there.
Yeah.
And then, as we start to fall here lower, if we break below this 400 level, we're going to see a couple of things. The first is that we're going to see our, maybe our short-term support here at the 390s, 380s. There's another level of interest over here. Let me just deselect that for a second. So we have this area right here, this that I put on the 4-hourly. We also have another area over here where we're looking at this bounce off that lower end of the pennant where we rallied. And pretty much this bounce here off that tip of the pennant on, what is that, Thursday, is what initiated our run here all the way up to 450. So that can be retested. That can be retested in the form of retesting the bottom of this pennant here. So I would like to keep us, above these levels, and we can kind of see our movement out of this range. Going into Monday. And this might not be immediate as well, right? So this might not be something where we're seeing these levels, kind of get tested automatically on Monday. I'm not saying we're automatically going to go 430. This can be dragged on a little bit throughout the week as well. If we do break back into the pennant though, then I do think we're going to see some more consolidation here to this bottom half of the tip. Unless we break out early, right? And so that's that kind of thing where we can kind of see our movement here Monday into Tuesday, kind of break this downside, test the bottom of the pennant, and, bounce higher again if we have support in those ranges.
So just kind of looking at this overall, you're looking to catch the bottom of that at 370, and then with the high upside of 450 heading into the end of October?
I mean, and that's the thing is that, as we're looking, a little further towards, what might happen as we approach our earnings, right? So if I manually expand this here,
yeah,
I can contract this, and then I'll bring it over to the right a little more. Earnings is going to be over here.
Yeah.
So any type of reaction on that longer term time frame, we still have room to kind of play around in pennant for the next week, right? And so just because we had this sharp sell-off here, we can bounce out of the pennant at the top. We can pull back into the pennant, test around there for a week, and then still bounce higher as well.
Yeah.
Or in a worst case scenario, we break to the downside of the pennant, which is something I don't think is going to happen. Definitely,
yeah, I think that would be highly unlikely.
I don't think we're going to get to that. So, if we're looking at this, if I go back to, let's say, like our 4-hourly here, this is going to be, where our prediction is. We're specifically looking at the 28th, so this is probably where it's going to end. And I can edit these lines so that they don't automatically extend, because I don't want that to, be misleading that these pivots are going to have reactions going that far.
Yeah.
Probably looking at something closer like that before I would redraw those lines. right? So I have those pivots in there.
Yeah.
That's very short term, right? If we're looking at this on a 4-hourly scale, this movement right here to test this area is going to be very small in comparison to, the final exit of this much larger pennant. And that's when we're going to see, a really big movement to the upside or the downside, depending on how Tesla exits, this giant range, right? Where we can kind of see a break maybe of this 450, and that's where we'll start to shoot higher, retest maybe the 500s.
Yeah.
Right over here. So short term, we're trading in this much tighter range between, it would be like 430 and then, maybe the 380s, 370s over here.
Yeah, if we could get range bound from let's see, you look like you got it from 408 to 424. When I talked about it earlier today, I had the 411 to 429 range, but I think that is where we're going to end up staying, leading up to any sort of news catalyst. I think that would be the ideal range to trade, because you're looking at almost a 20-point move that you could scalp on almost daily.
Right. And that's that thing here is that, if we maintain this range going forward, right, so which would be about the gray box, we're still above the pennant, right? So we would still be in a position where we could bounce higher and retest, that really strong resistance at 450.
Yeah.
So it's only right now that we've pulled back to retest our pennant breakout that there's a little bit of concern, higher concern, for it re-entering the pennant, in the next few days. Aside from that, if we do bounce here into Monday, that's when we can kind of see that uptrend regained, that retest of the breakout confirmed, and then maybe we'll have enough volume to break out of that 450 level. But that's all, for longer term on this much larger time scale. If I zoom in now, and we're gonna, take a look at maybe our 30 minutes candles over here. These red lines, these pivots are going to have reactions on this much smaller time frame. But we can zoom in specifically, take a look at, this range right here, maybe the last 5 trading days, to create a even smaller zone within, this area here to find these reactions. So I could do this right here where we can just kind of look at what's happening right here in this area, right within this zone. So for now, I'm going to delete these lines. And I'm just going to look specifically at, our candles from, maybe Wednesday till today's movement.
So Chris had a question asking about the inverse head and shoulders pattern there.
Right, and that's something that we could see play out within our, movement here if we do bounce off of this level. Like I said, there is room, going into Monday for us to still test a little lower. But right now, I want to see this area being held. We're exposed for that movement to the downside, where we can break that pattern on Monday, right?
Yeah.
So, if we do see that play out, I do want it to be held. Right now, though, just looking at this time frame for, our potential range just for Monday, we're going to have some much shorter, smaller areas of interest here. And obviously, the first is going to be off of this high here from 930, where our candle was at 439.13.
Yeah.
I'd put it right around there and have that start as our level for a breakout going into next week, right? So if I come over here, have that going right around, is that right? I did the wrong tool, sorry. Here, and then we can manually edit this. so that it has a little bit of range for next week as well. So, we probably aren't going to test that immediately on Monday. So I'm going to extend it out to maybe Thursday. And I'm going to dash it as well so that I know, for my reference, this is a much shorter level outside of the pivots. I might usually even change this to a different color as well, just so I have that very well, distinguished.
Document so you can make sure you don't get confused.
Exactly, right? And so that's something that's up there, right now. And you can do this two ways. You can have that line coming back to where your interactions are, right? Where we have this, quick rejection here, right? Very small movement. If I zoomed in on an even smaller time frame, we would probably see maybe the red candle between these two. And then that second initiation here of the downtrend of our sell-off. And I can have that line extending all the way to the left, or I can just have it extending where it matters, right? I already know where my reaction, my zone is going to occur going into Monday. I don't need it to extend back to that. Now, just looking over here, we're going to have another price level right around here at the 415 mark as well. And so that's something that I would put in on a similar time frame. Make sure I have the right tool. If we're looking at my candles, I'm probably going to move it just a little bit higher, around there. And we'll do the same thing. And let me just edit that. So that should extend a little farther. And I'll just have this come in, so that's at 9. Oops. Hold on. See if that works. There we go. Do the same thing for this guy as well. That's pretty good right there. And then the last thing, if I'm looking at it right here, I would have another line right around the 420s. Probably right off of these wicks here. Around, was that 423?
Yep.
Put it right in like that. Do the same thing as well. Change the color there. So now I have targets in on multiple time frames, and if we wanted to, we can even go to a shorter time frame and take a look at maybe some 15-minute candles. Right now, I have a potential area of support in this green box. I have some upside targets if we do bounce off of our first pivot of support, which I would name here. And now at this rate, basically what I'm doing is I'm set up for Monday on multiple time frames using a setup that'll allow me specifically to kind of be able to trade Monday's price action with the context of what might happen later in the week as well. Just looking at these levels here, I have some very short-term reacting levels. These are all going to be, these recent ones that I charted on the 30. all going to have some quicker reactions when we approach them. And so now that we're here, I can set myself up to say, I do expect a bounce off of that support there. And automatically that's a movement to 415, break of that. We have a movement higher here to this level at 423, with my first resistance being at the 430 mark again. I also had a level here in off of 445. Let's see, where's this guy? 439. So like right over here, I'd probably put that level. And that's this guy right here, where we're having a reaction right off that. So I put that in there, and now I have a trading range that's established specifically for my movement on Monday. As far as any other additional studies that I would use when, in coming to this trading setup, we're hoping for a bounce. We have a couple of levels to the downside here, and I can now go ahead and add in some fibs as well if I wanted to. And so that would probably be in this set right here. And so now if we're looking at the trading ranges for both of our days, we had our rejection here today at our first pivot, which would have been support if we weren't down in the market. And we sold off following that. My next pivot target here is going to be a break of that area towards our next, which is that red pivot, and it lines up right around 423 as well. So as for an upside target, I would probably value this range 423 as my target for the day if we are expecting some upward movement. And so I have all of these lines in here. Notice that some of these automatic studies, like the pivot lines, are correlating to exactly where we put our lines here.
Yeah.
Which isn't a coincidence. It works out like that. If I had these studies in automatically, I probably would have saved myself time because I don't really need the duplicates of these lines. But just showing you how I might identify them for Monday is going to help, because you can identify and establish many additional support and resistance ranges outside of some of the larger ranges, right? And it'll allow me to, go in on these shorter time frames. If we're looking at 15-minute candles, for example. I'm just looking at these 2 days.
Yeah.
Allow me to trade and scalp in between these zones for any type of day trade that I might be doing, while I still, like I said, have that context for what might happen later in the week as we kind of move on to farther out ranges.
Yeah, just looking at Monday and this coming week, based on the other fundamental news that we have with Trump going to the hospital and having a low-grade fever, if we do continue downwards, having this chart is actually a really good tool to know that, hey, these are the levels I need to watch and try to play the bounces here, or if they break below, then I can go the opposite direction and short for profit.
Absolutely, right? And so that's the thing, is that I would keep all of these ranges basically in the chart. Not only for intraday movement, but so I have some context as to what might happen throughout the week. Right, and so going back to that longer time frame, I can actually come over here and we'll erase our highlights so it looks a little cleaner. Back on a 4 hourly time frame, this is our targets, our expectations for the week, to the upside and also to the downside. I'm still bullish on Tesla as long as we can hold this area.
Yeah, I agree with that. You're looking at the 406 to 398 range. Yeah.
Right.
Although I definitely prefer that next leg up between that 408 and 424 level. I think that's the key for me.
Absolutely, right. And so, like we said, I established those as that larger resistance support range. And if you notice, that's bouncing off. It's correlating right with our retest of the breakout on this pennant, right? So, like I drew those lines before. If we start to bounce over here and start to retest higher to the 420s, 430s, we'll see that happen throughout the course of Monday into Tuesday. And so we can see something that looks like this, where, kind of coming over here, we'll open up Monday at around here, provided we don't move that much in pre-market. And we can kind of see something like that, right?
Gotcha.
And that's going to be similar. The reason why I drew it like that is because it's going to be similar in our slope for our first movement, right?
Yeah.
So if that's our first movement right here, this breakout, obviously it's going to be probably a little bit steeper. So like that.
Yeah.
That's going to be on a similar time frame. What I would expect if this is confirmed, right? If we confirm the breakout and test higher.
Yeah.
Right. So I'm looking at that there. On the inverse of that, like we said, we still can acknowledge that there's some room to bottom out here and retest that pennant. So it's kind of like a decision time here for Tesla. We've pulled back. We've had a, what was a, pretty sizable pullback here, -7%. And now we need to see if we're kind of exiting this range to retest those 430s, 440s, 450s, or this is specifically right here, this green area on Monday, why we understand we can kind of fall to the bottom of our larger pennant here.
Very cool.
Yeah, and that's about that. As far as the studies, I know you guys saw that, but nothing crazy over here, just some very basic studies that I would use. And if you have any questions about how to set up your charts or set up your studies like this, I'm always available. You can always reach out to us. And I guess now that we have this kind of established, we can probably head over and talk a little bit about some Q&A answers.
Yeah, I think that works. I think one of the more recent ones that we got was talking about max pain theory, and how that works and how to avoid getting crushed by max pain.
Absolutely. So max pain is going to be that area where the largest number of contracts open, right? So you would look at this for every upcoming expiration. So now that this Friday has passed, we would look at it for example, next Friday, the 9th. And based on that current open interest, the largest number where these contracts expire worthless, right? So what the maximum pain for these contract holders would be on both ends, both puts and calls. You can use maximum pain in a couple of ways. The idea is that outside of any, major breakouts or, news or things of that nature, the idea is that the stock will gravitate towards that max pain towards the end of the week, right? And that's kind of like something that we saw happen here with Tesla, unfortunately, where our max pain was 420 and Tesla closed at 415.
Yeah.
And while we had bullish expectations for these numbers and a lot of bullish sentiment, having such a low max pain in correspondence to where Tesla was trading at yesterday is a bit of a warning sign, is something to be concerned about. When Tesla was trading at 450 and our max pain hasn't gone any higher to kind of come or approach that, we were seeing it stay at 420. That's a sign that the open interest isn't really pricing in that movement, right? Where all of these contracts that are open are staying at 420, people aren't gravitating, they aren't moving higher in strike prices, and that number stayed the same. We saw an approach to 420 here.
It's one of those things too, right, where you see an uptick in volume that can sort of offset what you're seeing with the max pain theory. I know back in, I want to say 2018, 2019, when SPY wasn't as volatile and it wasn't gaining and losing 2-3 points per day, max pain was a huge factor in trading SPY options. But after we started seeing that increased volume with continuous positive catalysts, so like the China trade deal 1, China trade deal 2, things like that, max pain theory started becoming a bit of a abnormal situation, because the issue was, oh, hey, the volume's going to pick up and we're going to ramp and things were moving in that direction. But now that we're kind of cooling off, I think we're seeing a flip back to, hey, what the market is going to do, what screws the most amount of people. And that's essentially what your max pain is.
Absolutely. And so if we're looking at, our options volume, using Tesla still at the same example here.
Yeah.
While there was for this Friday 55,000 open contracts on the 4:30 strike call.
Yeah.
There was actually 58,000 contracts on the 4:20 put. That much of a difference. And also simply the fact that the puts were outpacing the calls going into this Friday's announcements is still showing us the, potential downside, the amount of bearish interest there is in Tesla. So now we can take this, number and then use it to kind of gauge our interest for next week.
So when you look at max pain, do you do the calculation yourself, or do you just use maximumpain.com?
You can use maximumpain.com. I'm not going to calculate it myself, although it's pretty easy. Basically, you're just trying to look at your options chain and get an idea of specifically where the highest volume for contracts is at both the calls and the puts. You would have to add up your open interest on both ends and find out, where specifically that strike price lies. It's something that you can kind of visually gauge if you're looking at your, options chain, but it's much easier to just get it on one of those sites.
Yeah, it's kind of the trading strategy that I go with, because I'm really big on volume and open interest to kind of follow the algo and follow the money, so to speak. And after looking at it for a while, you can right away, as soon as you go to an option chain, you can tell, okay, so the money's flowing into the put side, flowing to the call side. This is kind of the standard deviation. This would be worst case scenario.
Absolutely. And that's one of those things too, is that you can use max pain not only as a way to kind of gauge where the money is going, right?
Yeah.
Use this idea of, the volume and contracts to kind of figure out what's being highly traded. But you can use it also as a trading strategy within itself, right? Where you can kind of create a premium sell strategy on the opposite end of the max pain.
That I'm unfamiliar with. I've actually never tried that, so.
Right, and that's one of those things is, for example, if you had a wide iron condor, you can strategically scale your area for profit, to a deviation within where that max pain lies.
Well, hey, I didn't mean to cut you off, but that's pretty much what was sent out in the alerts for MU's earnings, right? Because that was an iron condor, 4-leg option play.
I wasn't familiar with that one, but yeah, that would be. And so you can kind of figure out, where the price is most likely to pin by the end of the week. And then now you have a premium credit strategy where you're making this money as it hits that pin. And it's going to work in the same way as like all of the butterflies that we've been trading recently, but instead of having a specific strike that you want it to pin at, you're decreasing your maximum potential profit by expanding that range where you can hit profit.
Yeah. It's a much safer play with a lower return, but a guaranteed higher percentage success.
And those are the types of strategies specifically that you would see, being used for any type of choppy condition, any type of, market stagnation, anytime we're trading in a range. And you want to play that range to the maximum. Naked options aren't going to do it. But if you, have an idea of where we might pin, if you have the max pain and you're able to trade, some of these spread strategies in your account, it's not that difficult to kind of set that up in a way where you're primed for profit. Against what happens, right? Where you can make money in both directions.
So we just got a part 2 to that question from Chris. Is the max pain only for monthly calls or for weekly? So you can look at it from weekly, and you can also take a standard deviation and average and get an idea for the monthly. Although I'm going to say the longer the time frame goes, the more uncertainties there are in the market, and I wouldn't think it'd be that viable. I think you should stick to the weekly. What do you think?
Absolutely. I think it functions on a shorter term time frame because obviously as we approach expiration, we do want these contracts, or the market makers want these contracts to hit their expiration worthless.
Yep.
And so that's when you'll type the closer to max pain that you are, the faster you'll kind of see it gravitate. If we're looking at something that's maybe a max pain for 2 weeks out, it might be less accurate, like you said.
Yeah. All right, let's see what else we had. Oh, here's a good one. Can you give some strategies on when to sell leaps?
Let me see. I'm just looking here. Is it okay? So if you had a 2-year expiration in 2 months, you get 100% return. What is recommended?
So take the money. Always take the money.
Yes. Yes. There's a couple of things you can do, but if the idea here is that if your leap does hit such a large return, you definitely want to adjust the position, right?
Yeah.
You don't want to let it sit. And it's one of those things, for example, where, if let's say we take a look at like some of the Apple leaps, where they were hitting, north of 40-50% profit.
Yeah.
Looking at, let's see, I had a March of 2021 leap in my account. You can manipulate that position in a couple of different ways. Obviously, the easiest way would be to go for a higher strike and secure some of that profit, get a cheaper leap for the same date if you expect that movement to be maintained through the date.
Yeah.
Obviously, you can roll to a further out date, maintain the same strike, but now you have a little more time value in there. I would not recommend rolling generally for leaps because you're also going to decrease your delta value when you do that. And you're just kind of giving yourself, while you're giving yourself more room to profit, you're also giving yourself a little more uncertainty as you go farther out.
And you're decreasing the amount of money you can make within a certain price movement. As far as rolling out leap contracts, I would also say don't do that. I think if you're ever gonna go into a leap, if you have a position that expires within like a month or two, right? And let's say you're up 200%, you can roll that into a leap contract, hold it until the end of the year, and then sell it for profit afterwards. What that will do, that'll offset your capital gains tax that you pay at the end of the year, and you still get a decent percentage of those gains. Because essentially you just rolled your profits and you're assuming that that trend's going to continue. So you compounded your gains, you offset capital gains, and then you have a profitable play. I don't know if anyone ever goes from a leap to another leap. I think that you just be taking on more risk for minimal gains.
Absolutely. And that's one of those things, is that if you need to adjust the position, there's better ways to do it. So another strategy as well that you could do, depending on the time frame, right? Depending on how far away your leap is that you can also look into calendar spreads specifically, so that you can maintain your position and also take some money off the table. I'll give you an example. Let's say you do have a Apple call for March of next year, and let's say your strike price is up in the 160s. In the interim, for a shorter expiration date, you can sell a call against your leap. And what that'll do is that'll allow you to make a little bit of money if that credit is maintained, right? So what I could do is I could say, okay, I have my March call that I'm bullish on, long 160. And for January, I could sell a 130 call. And as long as Apple isn't hitting 130 by January, but maybe it's hitting 160 by March, you can profit off of that short leg of the calendar spread.
Yeah.
So that's a little advanced, but it's also another way just to think about, where your strike price is, how realistic it might be reached, what your current exposure is in the lead, how much of your account that is, and whether you do need to adjust it. There's a couple of different ways to do it.
I mean, there's also the whole thing where what's your goal with that position? Like if you entered in a Tesla Leap for 2022, right? Are you just looking to profit on the big parabolic runs that it has? Or are you looking to be a long-term investor? There's just a lot of variables. Some people are comfortable with taking 25, 50% on a Leap. Other people will hold it until it goes in the money. But it's honestly personal preference. Well, so whatever your exit plan was when you entered into the position, that always stick to the exit plan. Greed is what will kill you. So you're better off just taking what you originally thought you were going to get.
Absolutely. And just to expand on that, like you said, depending on what your goals are for the leap, you can have a leap just to have a long-term exposure. You can also have a leap as a stock replacement as well.
Yep.
It really depends on your specific account and your specific goals. If you're looking to hold a leap for a predefined movement over the course of a couple of weeks or maybe even a couple of months, that's a lot different than going long on a leap as a stock replacement and intending to hold it throughout the entire length of your expiration.
Yeah.
One of the examples that comes to mind, if you were talking about Tesla, for example, was that at one point we had 1,000 strike calls for 2021 on Tesla.
Yep.
Those calls proceeded to go to over $200 in premium.
Yeah.
If you had intended to hold it the entire time, but specifically we intended to hold those for a specific trading range, for a specific breakout.
Yeah.
You might not have been inclined to do so, but if you did, you would have made a lot of money.
Yeah, you would have turned like $800 to 20 grand or whatever it was.
Mm-hmm.
Yep. All right.
Let's see, we got any other questions here?
Yeah, we got one more. What is the effect of volume on price movement?
Well, volume is strength. Volume is confirmation. Volume is essential in any type of movement because it confirms that movement, right? So you can have validity in the size of your volume, right? You can have a confirmation or you can have a potential warning flag depending on the volume.
So to add to that too, I mean, we've seen some earnings calls where there's not a lot of volume heading into earnings, and then during the after hours announcement, the 1 minute chart is very choppy. It gaps up, gaps down. That's a low volume play, so there's not a lot of conviction there. So the following day, a lot of companies that do that will either tend to go flat or sell off. What you want to see in regards to volume is you want to see a massive increase based on any sort of announcement. So when Twitter announced its subscription service that one day randomly, and then Twitter just pumped up $2 and sold off immediately, that was an example of where significant volume came in, they bid the price up, and then immediately afterwards, the news came out that, hey, it's not confirmed to go into effect at any time soon, and following more volume came in and sold that off. So like Chris was saying, it's just confirmation on where the ticker's heading, that's how parabolic runs start. That's how FOMO starts, momentum. So Tesla picked up all that volume, hit 1,000, and then more volume came in and it kept going parabolic. And then we've also seen in the past where like Beyond Meat, Tilray, Nikola, they all had significant volume flow in, expand the stock, and then once the volume faded, you realize that there was nothing really there to carry that run.
Absolutely. I mean, looking at volume from the perspective of, us primarily day traders, you want to look at volume not only historically, but intraday as well, right? Where you can kind of look at the volume throughout a day, compare it to the volume previously, and use that information to inform you about trades, use that information to inform you about momentum, the size of expected movements. It really is like a all-in-one tool, right, to kind of help you trade better because volume doesn't lie. Volume is never going to occur, and then you see the price movement not move in comparison to it, right?
Yep.
Going, off recent examples, one of the things Hovan said yesterday was that even though we kept seeing repeated 500 calls for today, October 2nd, coming in all day on the sweeps, the volume, aside from very end of the day, wasn't very large, right? We saw Tesla kind of pumping up all day throughout the day, but for the most part, the volume kind of stayed pretty stagnant up until the end there, where we did see some spikes in it.
So how do you feel about so this past week and the week before are pretty good examples of it. The low volume gap ups on the S&P. So when you see something like that, what does that tell you in regards to conviction and just overall price movement? Because when I see that, I don't take it as a trustworthy movement. It tells me that, hey, you should probably hedge a little bit.
Absolutely. And that's the thing, is like we said, the larger the volume, the further our conviction, the further our confirmation is, right?
Yeah.
On some of these lower volume days, we'll see movements that can easily be rejected. And the reason why is because these movements aren't being supported by the majority, right? You need volume to function as your confirmation, but also as your support for any movement, right? So if we're moving to the upside, we need a sufficient volume in order to create that movement, but we also need a sufficient volume to support that movement and maintain the same movement, right? So that's why you'll see a lot of times, fake breakouts or a false top on a stock where something starts to run up on no volume. And that's a warning sign, because once the volume comes in, it can easily reject that movement.
Yeah, that is a good point.
So always look at volume. That's the key thing. If we take away anything from here, is just always check your volume.
Yeah, volume, RSI, take some courses with Chris, learn how to chart. All good things.
Now, do we have any other questions for today? I think that was about it. Obviously, if anyone else had any questions that they wanted to ask us, always available. You can always come say hi, DM, or reach out.
Yeah, we're pretty active in the Discord, and we try to get to all the questions.
So with that being said, I think we should want to cut it here, and then we'll regroup next week.
Yeah, sounds good to me, man. I'll have this posted tomorrow night, downloaded today, rendered, uploaded, and then I'll have it timestamped for all you guys who want to go back and view some of the things that we talked about.
Absolutely. We'll have this on YouTube for you guys, so if you want to check it out, feel free to do. Until next week.
See you guys later.
All right, see ya.
Thank you, guys. Awesome. Have a good weekend.
You too.